is Gail with Traders Help Desk, and in this video I wanted to show you a trade signal. It came in on the USD/JPY and the strike price was at 67, so that would be 117.67. Now I'm in this at the 117.70. What I want to show you is that going into this, you're going against your higher time frame, which is your 60-minute chart. See how the stochastics is coming down here. Stochastics is oversold here, overbought over here. This is probably an indication, not that the trade will not make money, but that the trade likely will not expire in the money. Now the reason is because you have an hour and a half on this binary. It's probably going to pop up to 117.74, and then it's likely to come down. So trying to get this to expire in the money is going to be very hard because you're fighting the stochastics over here on the 60-minute chart. So I'm going to pause the screen and we'll see what happens. As you can see, I put this blue line here. This indicates where price should go. And if you want to know why price should go there, you just look over at the 60-minute chart. And when you look at the 60-minute chart, you can see this is the typical movement of price. It goes up, then comes down, goes up, comes down, goes up, comes down. This is called a zigzag pattern for those of you that don't know. So you've had up, 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 up. Now it should pull back again. This is also indicated on the RSI. And if you notice, each one of these indicated the retracement. This is why I use the stochastics. Now this one is a little bit whippier than the one I have designed, but it still serves the purpose if you know where to read it. So you get an up move, you get a retracement. You get an up move, you get a retracement. Here's your hidden divergence. You can see it here. You had a hidden divergence here. In other words, as price was making higher lows, the stochastics was making lower lows. It should not do that. You can also see here you had hidden divergence as well. Again, lower lows, again higher lows. So this is what we call a zigzag pattern, and it forms in all markets, and it will be the failure to test this high that causes this market to go down. And you are fighting this higher time frame. In other words, you're going against the higher time frame because the higher time frame still needs a retracement. Now, just to let you know, this is right about here is where the ATR is on the 15-minute chart. Remember, you've still got an hour in this binary option. You're going against this time frame. I don't like the trade. Okay, as you can see, it's at the ATR level. I'm going to go ahead and exit because I think it's going to come down off of there. Let's see if we can get out. And I'm going to continue to watch this because I think it's going to come down off of here. Remember, this is the area that we had an ATR that was going to stop price. As you can see right now, it did fail to test this high that I have marked up here. And so now price is coming down. If you had waited until this point, you may be profitable, but not very profitable. I think I paid $45 in risk on that trade, and I got out up here versus getting out now. So, you know, is knowing how to read the chart. And that's something that, you can read all the books you want, you can watch a lot of videos. Most of the time, you're not going to know how to read these charts like this until you actually attend a live seminar. And this is what we focus on for 2 entire days, is how to read these charts in combination with the indicators.